Hi everyone, welcome to another weekly Forex forecast for the week ending May 15th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the pound versus the USD, the New Zealand dollar, as well as gold or XAUUSD. And I'm going to wrap things up with Bitcoin or BTCUSD. We have several currency pairs that are consolidating but getting ready to break out, and Bitcoin is on the verge of a confluence of events that could send prices higher, so you're not going to want to miss that one. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the EURUSD, and I spoke about this one a couple of times last week, where we have this wedge pattern that's developed from some of these year-to-date lows. So you can see where we have this wedge floor down here that was retested last week, and then we also have the wedge top. Now, this support area did trigger a bounce last week for a move up above that 108.30 area. So if I zoom in here, I've actually got two levels drawn simply because this area between 108.20 and 108.30 is definitely more of an area than an exact level. So if you look back through this recent price action, you can see this low down here, some of these lows, this high, these highs through here, this low. So you get the picture. We've got lows and highs between 108.20 and 108.30. All right, so I'm looking at this as a zone rather than a specific price. And you can see where last week did close below that area, but then late last week we got this surge in price, and so far the EURUSD is holding above 108.20 and 108.30. Now, we did get a decent sell-off on Friday. However, the pair still closed above that 108.20 to 108.30 area. So for the week ahead, I'm essentially looking for this area to attract buyers, and 108.90 could attract sellers on the way up. Now, I still hold a short position from this Friday candle up here, which I announced in the members area, and that entry was based on a 4-hour ascending channel that had developed back here. So if I draw quickly a channel, you can see where this price action up here actually formed a 4-hour bearish pin bar. So I was actually entering up here on this Friday. I then added to that position when we got this spike up into 108.90. So I remain short here. I'm essentially looking for a bigger breakdown of not only this wedge, but also this multi-year trend line. So this is something that I've been talking about now for weeks, where we have this trend line from the 2000 lows, and I'm on the monthly time frame in case anybody's interested. So we have this multi-year trend line, and you can see where the EURUSD is just pressuring that level, but we've yet to have a breakdown. So as I've said recently, I still think that it's going to take a monthly close below this trend line in order to expose 105 and also 96. So we need a monthly close. That could be May, June, July, whatever it might be. We need a monthly close below this level to confirm the breakdown and expose 105 followed by 96. So until we get that, keep in mind that this area around 107.50 is going to continue to serve as support, and we could also still see a rotation higher into the 115 resistance area. Now, that outcome is less likely in my opinion, but it is still something that could happen. But for the week ahead, it all comes down to how the EURUSD responds to that 108.20 to 108.30 support area, as well as 108.90. So 108.90 is resistance, followed by this wedge top, and the 108.20 to 108.30 area is support, with a break back below that exposing that wedge bottom. So the British pound continued to consolidate last week, and here we have the daily time frame where you can see that we have this lower support level. This is something that I've been talking about now for a couple weeks, and this lower support level is holding on a daily closing basis. So this is why I use the daily time frame, because if you look at this price action through here, you can actually see an intraday break below it. However, if you use the daily time frame with a New York close chart so that each of these sessions closes at 5 p.m. Eastern, you can see where this support level is currently holding. We also have the bottom of this descending channel that is currently serving as resistance. So this is another level that I've been talking about. And if you look at last week's forecast, we were looking at this area right here as resistance. And I also mentioned how a return to this support level was likely. So we had that, and right now the pair is just consolidating. So as I mentioned last week, the idea is the same in that we need either a close below this wedge support or above this wedge resistance. So until we get a daily close either above this area or below this one, the pair is consolidating, which means that trying to find any kind of momentum is going to be difficult. So I'm seeing this where a break above this resistance area could take the pair back to the top of this channel somewhere around 129, whereas a close below this support level would expose 122 and perhaps 120. So the New Zealand dollar remains a stubborn pair to trade simply because we have this consolidation after this massive sell-off. So we had the sell-off back here in March, which did a lot of technical damage, including closing the pair below this multi-year trend line, which is right around the 62 cent area. So this region through 62 and 62.50 has always been a confluence of resistance that I've been watching. You can go back several weeks and see where I pointed out 6200 as a confluence of resistance. So with the pair now approaching this region, this is one that I'm going to keep a very close eye on. So I did have a short position on here last week, which I was forced to get out of for a small loss, but that's how things go sometimes. So I still maintain the fact that until we get a close below this consolidation, the New Zealand dollar is going to be a little bit difficult to trade. So if we see a rejection from this 6200 area this week and a rotation back into this channel support, that's something to keep a very close eye on. Now, on the other hand, if we start to see daily and of course weekly closes below 6200/50, so if we see the pair close back inside this area, that would be a sign of strength and would also delay the bearish outlook. However, I still maintain the fact that the New Zealand dollar is headed lower because we do have what appears to be a head and shoulders pattern that's played out over the last 20 years. So you can see where we have this left shoulder back here, we have the head, and then we also have the right shoulder. Now, furthermore, we also have a trend line that extends from those 2000 lows. So this level was actually broken recently with that March sell-off, and this is why I said that the March sell-off did a lot of technical damage, because we got a close, a monthly close below this level, which you can see where it served as support back here, support on this candle, support just before it broke down. Then we got the monthly close below it, which means that this area around 6200 or just above should now serve as resistance. So it could take another few days or even weeks for this to play out, for the pair to come up here into this resistance area, but I still like the idea of a lower New Zealand dollar over the coming weeks and months. So if I move back to the daily time frame, you can see where immediate resistance comes in between 62 and 62.50, whereas channel support is down here around the 60 cent mark, with a close below that taking on 58.60 and perhaps 56.50. Gold, or XAUUSD, is another market that's in consolidation. So we've seen a big run up here over the last few years, and we also had this pullback here due to the volatility, which was essentially a liquidation event, and then we got that immediate snapback to 1750. Now, ever since that time, you can see where gold has formed what appears to be a wedge pattern that also represents consolidation. So right now, what I'm looking for is either a close above this wedge or below it, because as you can see, we have two touches down here, and last week actually tested the top of that wedge pattern. So it's going to take either a close above this area to expose 1750 or below it to expose 1640. Now, it's interesting to note that the measured objective of this wedge, should we get a break higher, is 1800. So if we do see a break higher from this wedge pattern, we could see a run at 1750 with a break there taking on the 1800 area. Alternatively, if we see a break lower, again, I think 1640 is one to keep an eye on, as well as 1550. Just be sure to respect the potential for either outcome, because although the uptrend is very much intact here, this market is also getting a bit overextended because we've had this huge run up over the years. And yes, even though we had this pullback through here, gold is still trading at multi-year highs. So don't discount the possibility of a break lower for a move back down here into 1640 and perhaps even lower. But at the end of the day, it's all going to come down to the market and which way it breaks from this wedge pattern. So I want to wrap things up with Bitcoin. This is something that I mentioned last week on the blog for the first time. It was the first time I publicly talked about Bitcoin, even though I had been sharing with members for several weeks what I was doing. So I've been accumulating Bitcoin ever since early April when prices were near the $7,000 mark. So when I talked about this last week, the idea was essentially twofold. All right, on the one hand, the technicals are lining up in a way that we have this rally, we then have consolidation that commenced ever since this 2017 top. And you can see where we have this wedge pattern that could very well serve as a continuation pattern. So it could be a continuation of this recent rally where if we get a close above this wedge top, that could send prices much, much higher. And on the other hand, we have a fundamental event for Bitcoin coming up on Monday, in fact, that's called the halving or the halvening. What that means is that the supply for Bitcoin is going to get cut in half. This happens once every 4 years. It occurred in 2012 and 2016, and both of those events were followed by massive rallies. Okay, so I talked about this on the blog where we analyzed what happened over the last two halvings and therefore what could happen this time. So I'm going to pull up a longer term chart of Bitcoin to show you exactly what I mean. So this is the chart that I posted on the blog last week. And this chart goes back to 2013. All right, so this is the 2013, this is the 2012 halving that occurred back here. And then we also have the 26th halving that I mentioned just a moment ago. So as you can see, we had a breakout back here, right, that looks very similar to that wedge I just showed you. So this right here is the wedge top that I just showed you, where we have this confluence of events coming up where we're testing that wedge top. And then we also have a halving coming up on Monday that the last time this occurred was in 2016. And you can see where prices went from about 500, maybe 600 bucks all the way up to that $20,000 mark. So that was a massive rally in percentage terms. And we also have this ascending channel that has developed ever since this 2012 halving. So whether or not this pattern holds up is still unknown. All right, there are no guarantees. I'm not saying that Bitcoin will reach this mark over the next few years. But if I just look at the technicals, that's what the chart is telling me. So this very well could break down, it might fail, but on a technical basis, this is what Bitcoin is telling me right now, which is why I wanted to bring it to everyone's attention. Now, if I move back over to the chart, I'm going to drill down into the daily time frame here to show you what's happening. So last week, it looks like we did get a close above that wedge top. Now, as for whether or not this level is going to hold as support is still up in the air because today's session is unfinished. Remember that Bitcoin trades around the clock. So unlike Forex, where you get a break on the weekends, Bitcoin is literally 24/7. So if today's session closes back above this area, it means that it is holding as support. And speaking of support, if we do see a rotation lower, keep an eye on 9,400, 8,500, and 7,700 area. So these are all key levels to keep an eye on if we do get a rotation lower, but I still think that it takes a weekly close above this area just below the $10,000 mark in order to confirm that breakout. You could see from that weekly time frame that as of right now, we are seeing some selling pressure up here. So everybody was cheering that Bitcoin had cleared the top of this wedge last week. But in my opinion, until we get a weekly close above this area, this breakout is not confirmed. Because if you look at the daily time frame, notice how we had several daily candles back here that did in fact close above this level. So this placement right here is correct in my opinion. However, look at what happened back here. We had some daily closes above that level, but if you look at the weekly time frame, this level is holding on a weekly closing basis much better than the daily time frame. So again, I think it's going to take a weekly close above this level to really confirm the breakout. And I'm not trading Bitcoin. This is a longer term hold for me. So you can almost think of it as an investment over the next year or two rather than a trade. But I do think that Bitcoin has a lot of potential over the next few years. Just keep in mind that with Monday coming up, with the halving coming up on Monday, there is a chance that we could see a sell-off. Okay, we could get a buy the rumor, sell the news type of event where we do see some selling pressure next week. So don't be surprised if we do see Bitcoin pull back next week before the market eventually takes off. All right, so again, if we do see a pullback, I'm a buyer on dips. I'm not going to get out of this one just because we get a slight pullback into 9,400 or 8,500. I'm a buyer. I've been a buyer ever since this market was trading around the $7,000 mark, and I'll continue to buy at key support in anticipation of a much bigger breakout. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.